Now, Citron research says Jumia inflated its active consumers and active merchants figures by 20% to 30% in order to raise more money from investors. This and other allegations were made by the research house in a recent report. Adia Tobatele, a technology entrepreneur, now joins me to weigh in on the developments. Adi, glad to have you on the show this morning.
Good morning.
So the major argument here for Jumia versus Citron, as it is now, is that there were discrepancies between a private sector presentation and the figures they eventually did make public ahead of the IPO. Now, if you look at the order of investor sentiments, the way it moves once an IPO is done, we do get to see the rush in, the value of the stocks are high, and then the value, the stocks eventually do get to see a price appreciation where they get to sit, where they should see, finally. Did you see this coming on the back of the fanfare that followed Jumia's IPO at the New York Stock Exchange?
Fanfare? Maybe we should use the word hype. Jumia on the New York Stock Exchange, big deal. Africa supposedly had its day. Question, is Jumia really an African company, or is it a company that has a market in Africa? Two different things. African companies means developers, technology, management. Yes, Jumia is management, but is the rest of the company, I think it's based in France. It's a bit like a scheme where the majority of the consumers are in Nigeria, or there was a company, a product that Google once had, that the majority of the company was in Brazil. Doesn't make them a Brazilian or an African company. So, but because the way investing is done on the stock market means that if you have an African portfolio that you have to fill, then a company like Jumia on the New York Stock Exchange immediately gets into your basket. Then it makes an awful lot of sense to put a lot of hype that this is an African company and it's on the New York Stock Exchange. Certain investors do not have a choice but to put them inside their basket. So I would say hype rather than fanfare. Would it go up? Would it go down? That's what the market determines, having seen real valuations. I mentor startups, and pay on delivery is one of the curses of e-commerce in Nigeria because the returns are real. I've had a company that was doing so well, and then over Christmas, because the company's the products were not delivered on time, then the returns came not because the products were bad, but they were delivered after the 25th of December.
And we'll get to talk a lot on pay on delivery. I hope we do find the time to exhaust that as a subject matter. But I'm trying to weigh your sentiments and get your position on whether or not should Jumia have listed at all.
Oh, everybody should list. There wasn't a question of whether you should list.
Because you started the conversation with whether or not it was an African company or an African-focused company. It's not a fanfare, it's a hype. You build startup techs.
It's not a question of whether somebody should list. It's a question of what valuation should somebody list. I mean, even the woman selling bolly on the street has a valuation. The question is, does anybody want to invest in her? And that's what Citron is really saying. Are we investing in what was represented? I mean, am I buying something that at 10 naira when I should be buying it at 2 naira? Nobody's saying that the company is not functional. What the company is saying is that if I put my 10 naira in, when am I going to get my return? Because I'm expecting this company to do better than it is now. This is why we're putting more money into it. So why would I want to buy something at 10 naira when I can buy it at 2 naira? And that's why I say hype. Everybody wants to hype their product to an extent whereby people want to buy it or people want to invest in it. The question now is that, did you hype it in such a way that the growth is unsustainable?
So was it overvalued?
I believe it was overvalued.
The co-founder now, in his defense, has said that the filings, they're standing by the numbers that they gave the New York SEC, and the filings by Citron, according to the CEO of the co-founder of Jumia, were made up of figures, for example, gotten at different time and periods, and in some cases were describing different aspects of the business and they were being erroneously compared. Is that a plausible defense in this case? Seeing that, according to Citron, it did affect the valuation of the stocks initially. I'm
not holding brief for either side. I've been in this industry long enough to be able to make an assessment of my own based on the marketplace. If you have a lot of returns, it's going to affect. If you can't grow, it's going to affect. I want to put my 1 naira in and get 5 naira out. I don't believe I can put 1 naira in and get 5 naira out. On this particular deal, I might be able to get 2 naira 50.
If you say pay on delivery is essentially the drawback for getting returns on such e-commerce startup techs in Nigeria, where we are dealing with an issue of trust, how does an industry such as that break free from those discouraging numbers? We're trying to build trust to get e-commerce to go up.
The question is, why do people want to do pay on delivery?
Trust issues.
It's a trust issue. So if you're not giving good customer service in the first place, then you cannot build trust. The number of customers that will tell you that I bought A that was green and what arrived was blue is enormous. And that's where the trust is not. And that's why people vote with their wallets and say, I'm not going to pay until I see the thing, because I don't trust you. I don't trust your logistics. I don't trust your merchants. I do want the product. There is a demand, but why would I want to take a cake when you deliver me a pie?
So essentially, the response by Jumia CEO Nigeria, which we listened to earlier, was wrapped around defending their communication strategy. We've seen the report by Citron, but we decided to maintain some bit of a quiet for a while because we needed to, first of all, push out figures from our Q1 earnings, and by so doing, advising investors on this is where we have been in the last 3 months, this is what the figures are saying, take your position from what you're saying. What do you make of that communication strategy and their defense?
Look, this is not rocket science. Are the fundamentals basically there? Is the market there to grow? Is the market to grow the trust? Is the market there to spend the money? If you leave major cities out of Nigeria, then what Jumia is selling is convenience. If you go down any high street in any town in Walla, the things that people want to buy off Jumia are on the streets. They don't need the convenience. So the growth areas are major urban areas. These are the same people that want to do the pay on delivery because they cannot trust you putting a box on their doorstep with a pie rather than a cake. So it's going to be difficult unless they can grow the trust. And the only way they can grow the trust is to get the merchants to actually do what they're supposed to do. The test, for example, people say that Jumia is an Amazon. It isn't an Amazon. People buy off Amazon based on the reviews. The trust that the Amazon gives is the reviews that people who have previously bought say that you get good reviews, you get bad reviews. You are not allowed to delete reviews on Amazon. So when you go to Amazon and you say, I want to buy a blue pen, you know it's the reviews that you're using to get the trust. And therefore you then pay ahead of time because you're trusting. This sort of functionality does not occur on Jumia. So I'm buying a picture, not consumer trust. So the question of getting rid of pay on delivery, how would you get rid of pay on delivery when you can't build the trust?
You have to build the trust.
You have to build the trust. You have to use the technology to build the trust.
This will be an unfolding conversation as we wait to see further responses between Jumia and Citron. Citron CEO, if I may have, has said it's game on for him. Jumia has to face him at the Securities and Exchange Commission.
I believe they do.
Thank you very much for your time and thoughts for now. Adea Tobatele is a technology entrepreneur.